Hello and good afternoon. It's nice to see you all again. Thanks for coming. For those of you who don't know me, I think I know most of you though. My name's Todd Schneider. I'm the mission chief on Sri Lanka for the IMF. I have with me our resident representative, Hetarikin Vitradze, Yeri Jonas, Manu Kazanchian, and Nolan Samas, as well as Rajiv. I'm not going to try from the last name. I've tried several times. And we have been here for about 10 days. This has been a routine surveillance mission as part of post-program monitoring. We've had the opportunity to meet with usual economic counterparts in the central bank and the Ministry of Finance, as well as private sector representatives, and it's been a very interesting time to be here. In terms of what our findings are, we were examining the near and medium-term outlook. I think in terms of what performance has been recently, we see real GDP growth estimated at about 7.4% for 2014, and we see that relatively robust growth is likely to continue in 2015, somewhere in the 6 to 7% range. Inflation has been very contained, and it's expected to remain in the low single digits, although some upward pressure may emerge later on in the year as higher wages and salaries translate into increased domestic demand. The external current account improved in 2014, and it's, we think, likely to strengthen a little bit further in 2015, given predominantly lower oil prices, further growth in exports and services trade, strong inward remittances. The mission had a lot of discussions with the authorities, and we agreed that prospects, generally speaking, remain quite favorable, and that sustaining robust growth over the medium to long term is going to require continued commitment to policies in support of macroeconomic stability and structural reforms to enhance productivity and competitiveness. We welcomed the government's commitment to good governance and increased transparency, as well as financial and fiscal discipline. We generally agree with the authorities that the medium-term fiscal consolidation should remain a linchpin for macroeconomic stability and policy, ensuring a durable reduction in Sri Lanka's public debt. However, we highlighted a number of concerns with respect to the interim budget. In our assessment, looking at the numbers and what we have in front of us so far, achieving a deficit as low as 4.4% of GDP is probably going to be challenging. And we felt that the authorities should consider some contingency measures should revenues fail to materialize as projected. Further, in our view, the one-off tax measures introduced to finance the interim budget do not, from our point of view, constitute a step towards a more effective tax system. But we and the authorities agreed on the need for a more comprehensive reform to streamline the tax system and reduce or eliminate exemptions to put revenues on a steady upward path. And technical assistance missions will actually be following the completion of our mission in the next 2 to 3 months, and will be focused on a number of these areas. With respect to monetary policy, there's been a succession of steps over 2013 and 14 to help facilitate a recovery of private sector credit late last year and early into 2015. We see the current stance of monetary policy as broadly appropriate, but emphasize that the central bank should monitor credit, inflation, and liquidity developments closely in the coming months. We noted the decline in central bank foreign exchange reserves over the last 6 months, and we highlighted the need to preserve Sri Lanka's cushion of foreign exchange reserves, and in this context, emphasize the need for exchange rate flexibility. Intervention, in our view, should be limited to dealing with excessive short-term volatility. However, the exchange rate, from our assessment, does not appear out of line with fundamentals, particularly given the projected improvement in the balance of payments this year. A discussion on the post-program monitoring by the IMF's executive board is expected in late April. Thank you. I can take some questions.
Doctor, was there any discussions of a new program with the authorities? The ministers were talking of a $4 billion US program, and the market was talking about a $1 billion program. Anything?
No, we didn't discuss a program. as you probably know, IMF programs are very much centered around a balance of payments need. And from our perspective, the balance of payments is in a relatively robust position and likely to get much stronger in 2015. So there isn't really a need for fund financing. We did discuss a number of avenues related to cooperation and technical assistance, and I think there's a broad willingness to engage more closely, which we are happy to do.
But Doctor, when the reserves constitute about 90% or 80, close to the 90% range of debt servicing within the next year, are you comfortable with the BOP position?
Broadly speaking, the BO position is in a very good. It's in a very good position. I mean, the thing is, it's a tremendous windfall from lower oil prices. It's feeding through to the balance of payments in the coming year, and from a kind of standard reserve adequacy metrics, it's not in a bad position. So we think it's adequate. I think we feel that Sri Lanka can manage its financial obligations in the coming year. So there's, in that sense, not an immediate balance of payments need, and therefore not a need for fund financing.
What do you think of this central bank's moral suasion instrument currently in force as far as the foreign exchange market is concerned, where they are essentially controlling the rupee at the exchange rate at 132.90 in spot through the process of moral suasion, and also as far as 1 week forwards between 130.50 and 60 to the dollar. Do you think that type of controls, restraints, moral suasion, do you think it's in line with IMF thinking as far as the exchange rate is concerned, or do you feel that they should relax and allow the exchange rate to decide where it should end?
Well, I think that they're actually fairly committed to exchange rate flexibility. I think the concern is about short-term volatility, given that it's a relatively small and illiquid market. So I think there's a legitimate concern about short-term volatility, not based on the fundamentals. I think looking at the fundamentals, if they were looking at long-term, medium-term pressure on the exchange rate, that there's sufficient flexibility there. I mean, and it's not inflexible. The exchange rate does move, but as I say, from a fundamentals point of view, we don't see it as fundamentally misaligned.
Given the higher spending in the budget and also the possibility of higher domestic borrowing, and the oil prices have also been cut, wouldn't that increase consumption and maybe put further pressure on the BOP than it was earlier?
No, that's a very valid point. I mean, when we were looking at the outlook for 2015, I mean, there's a net windfall from oil. That's very clear and easy to quantify. But in the interim budget, also, as you point out, there's been a substantial increase in current spending, particularly wages and salaries and pensions. And that, plus the lower fuel prices here at home, will effectively raise household income, which means higher consumption. And some of that will feed into imports. But from the way we've been looking at it in terms of balance of payments flows, the increase from that side is going to be fairly heavily outweighed by the gains from oil. So on a net basis, the balance of payments is likely to improve significantly in 2015.
You said that achieving a 4.4% budget deficit will be challenging, and contingency measures should materialize as projected. What are the contingency measures that you suggest or advocate?
Well, we didn't discuss specifics. I mean, it's looking at it, there's a lot of possibilities here, and it's not clear how the revenue picture is going to take shape. Certainly, what's envisioned in terms of one-off tax measures could be very significant. I think that our concern was that if you take a look at the underlying growth in tax revenue, leaving those aside, it was fairly ambitious, which is fine. But we were concerned that, should revenue growth be, no stronger than it has been in recent years, that it might be challenging. Looking at it, from the expenditure side, that's really a line-by-line exercise. So are there areas, for example, in goods and services that the government consumes where things could be cut or delayed? I know that there's ongoing, review of efficiency. But this is something I think really that the authorities need to decide after considering what their priorities are for spending.
Doctor, now today Reuters, quoting the governor of the central bank, said that they are considering going for a $1.5 billion facility from the international markets to raise $1.5 billion. So, if, as you said, that our BOP is fairly comfortable, is there such a necessity to raise capital from international markets, and at which price will they be raised?
Thanks. Well, I think, when we're looking at the overall balance of payments, we're considering and taking into account what private capital flows are going to be, and a rollover of external obligations and going back to market to roll over existing obligations is part of that exercise. I think the point I was trying to make is that IMF financing is a last resort for the balance of payments. Sri Lanka is effectively a market access country, and so it needs to consider how it's going to roll over its obligations through the capital markets and other means before it comes to the IMF for financing.
But then the finance minister met the IMF officials in New York to discuss about the new programs. So any update on that?
Well, we met in Washington. The minister and the governor came to Washington and met with Deputy Managing Director Sheena Hara and also with the Managing Director Christine Lagarde. And from those discussions, we felt it was pretty clear. I mean, that from again our point of view, there's not a balance of payments need. Without a balance of payments need, it's difficult for the IMF to step in with funding. I think it's kind of instructive to take a comparison between the situation where it is now and the situation in 2009, the last time that the Sri Lanka approached the IMF for assistance. In 2009, the fiscal deficit was close to 10% of GDP. The current account deficit was expanding. Reserves were at less than 1 month of import cover. It's a very different situation from what it is now, where you effectively, right as of today, you have 3.5 months of import cover. The balance of payments is, in an improving position. The fiscal deficit has been substantially reduced. So the vulnerabilities are significantly less. It's really a different context.
Inflation has come down to record levels. What is your projection for inflation in the coming few months?
Inflation, sorry.
Yeah.
Well, we don't see a lot of push pressures on inflation, at least not externally, especially with lower commodity prices feeding through into the economy. So we don't see it as staying at record low levels. We built in an inflation expectation somewhere in the 3 to 4% range. And that incorporates what we see probably as some demand-side pressures, again, from an increase in consumption and demand.
But Doctor, don't you see a contradiction? If inflation has come down so dramatically, why is it that at yesterday's T-bill primary auction, yields went up by almost 100 basis points across all three tenures on offer? If ipso facto, if inflation has come down, should not the yields also have come down in the auction? How would you explain that?
I don't have an answer for that. I don't have an answer for that one. So I would have to look at it.
Do you have any concerns about the liquidity management? A lot of liquidity which is stabilized short term, and the past experience has been that they tend to get eaten up with credit and performance tend to fall when it happens, even though things are relatively okay. Has that been discussed?
I'm sorry, you're talking about liquidity in the financial sector?
Yeah.
Okay. Yeah, it's been an interesting transition. We've watched, liquidity rise over the past year, but it's now started to diminish. So there seemed to be, less appetite for private sector credit as it was reflected in the numbers. Now, with private sector credit now rising again, we're seeing that excess liquidity slowly diminish, and we expect it to be reabsorbed into the economy.
But Doctor, I wonder whether the fact that there is a possibility of rates rising, when you look at what happened yesterday, especially in that context, won't that be a buffer against the possibility of private sector credit increasing? That might temper the appetite for private sector credit in a sort of a market where the possibility of interest rates rising.
It really depends on how sensitive they are to those rates. Yes, there's been some change in the long-term yields, but I don't think necessarily that's going to be a make-or-break decision for private sector credit. These are investment decisions, and they have a horizon. But as long as the rates are relatively predictable, I mean, that's the more important thing.
Do you feel that the fact that these rates have seemingly shown a fantastic upward trend, that might be a cushion against any possible pressure on our BOP, on Sri Lanka's BOP? In the sense it might mitigate import pressure as a result. Do you feel that might happen? That might be so?
You mean, sorry if I understand your question, whether the change in interest rate differential
Precisely.
would provide, that'd be through the capital account, through financial flows?
Would essentially sort of mitigate any sort of demand on the BOP by consumption demand.
Sorry, if I understand your question correctly, whether or not
Import pressure.
import pressure.
Import pressure.
Import pressure. No, I don't think that's going to mitigate, import pressure per se, because effectively demand is coming from households and it's not necessarily related to the interest rates. If there's an impact on the overall balance of payments from change in interest rates, I think it would be through capital flows.
How concerned are you on the revenue side?
You know, I think it's fair to say that we've been concerned on the revenue side for several years. Before
Do you see any change?
Well, in the short run, I mean, this is an interim budget, and we recognize that. I think the positive news is that, at least in principle, we're very much agreed on the areas in need of reform. I think we had good discussions with the Ministry of Finance and also here at the Central Bank. And, you know, a couple of things need to happen. One is, from our perspective, you probably need to tackle tax expenditures, by which I mean tax holidays, fairly aggressively, to close that loop in the tax net. And the other is really whether or not we can work toward a simplification of the tax system. From a medium-term perspective, really, and I sound like a broken record on this every time I come, but you know, the tax system needs to be efficient, it needs to be transparent, it needs to be simple, and it needs to be even-handed. And I don't think there's any disagreement about that. And that's actually one of the principal focuses of the technical assistance missions coming in the next month, is both the structure of taxation and the current range of tax expenditures and tax holidays. And you know, the idea behind this mission is really to provide kind of an input into what would be a reform strategy later on.
If the government were to announce a program of structural reforms incorporating changes to the tax code, like the ones you just mentioned, simplifying, I'm just trying to understand how the IMF works. Could that be the basis of the fund providing a long-term program based on those reforms, based on supporting those reforms?
Well, again, it's the financing. So a fund lending arrangement is very much principled on balance of payments need. We have done, you know, some programs which serve sort of a coordinating mechanism, for example. But at least in terms of, you know, whether or not you need a fund program, the most important thing that we provide is not the financing, it's the advice. So, you know, the question of a program really would have to be addressed later on. It would be on the basis of policies and how closely engaged the government wants to be. And that's really, you know, that's an issue that will take shape really later on in the year. So I'm going to defer that question to later on. In the meantime, what we very clearly are doing is providing, you know, the advice to start building what we hope will be a significant and meaningful reform of the tax regime.
Following on from that, because of what has been said by policymakers, if given the high expenditures, for example, and if revenues, there's a delay in revenues coming in interim period, maybe next year or year after, or whatever, is there a possibility of a fund bank joint program coming into place? I mean, we have heard of precautionary facilities, then there's new structural adjustment, I think, for the new nearby document, that kind of facility coming into place.
Well, the IMF doesn't do budget financing. That's what you're talking about. It's a budget financing cap. And I can't speak for the other multilateral institutions as to what they're willing to provide.
But doctor, to put it very crudely, so what you say that our policymaker was absolutely talking bunker when they said that they had talks with the IMF and the other Bretton Woods twin of a new facility of $4 billion. To your knowledge, there was absolutely no talks for further funding as far as the fund is concerned. Is it? It's absolute balderdash, is it?
No, I'm not saying that. You're saying that. No, we had constructive engagement, and I think you have to take into effect that this is a new government and it's coming to grips with what might be available. So, we talked about what might be the most effective way for us to help, and in the meetings that we had in Washington, that was really centered on capacity building advice and technical assistance. And I think it helps to understand the nature of IMF financing, which frankly not many people do. That it is balance of payments need that determines financing, as it did in 2009.
Can you define capacity building?
Capacity building? Sure. I mean, capacity building effectively relates to institutions and their capacity to fulfill their mandates. So, our mandate is to work with central banks and ministries of finance. A lot of this is bringing, international good practices or cross-country comparisons. We also do capacity building through regional training institutes. We have quite a few people from the Ministry of Finance and the Central Bank attending courses in Washington on a range of things, from financial programming to forecasting, econometric analysis, model building.
Are you happy as far as the current status quo is concerned in relation to FDI inflows into the country? What have you to say about FDI?
I mean, FDI, more would be better. It usually is. And I know that there's a keen interest in promoting FDI here. It's very helpful, both in terms of diversifying economic activity, which we think is essential not only for long-term growth, but for long-term inclusive growth. But there's also a lot of knowledge transfer that goes with it. Essentially to attract FDI, the important thing really is a stable macroeconomic environment, a very predictable policy environment, and good infrastructure. And I think that's what Sri Lanka is working toward.
Do you see the government working towards that, to have a predictable policy-making environment as far as policy is concerned?
Well, we all agree on that. And I think they are working toward that, yes.
Okay, though it's an interim budget, are you concerned anyway about some of the controversial taxes introduced in the interim budget?
In the interim budget?
Yeah.
Yes, I think as we've said in the press statement, we don't see some of the interim measures as really a step toward a more effective and sustainable tax system. These are one-off measures by nature, so they don't last beyond 2016. Some of them are retroactive. So in that sense, again, what we're looking at is not so much 2015, but what happens in 2016. And what can you do to make the tax system more effective? And that's really, again, about expanding the tax base, about making it simple and transparent, increasing tax collections, and making it even-handed.
There have been allegations of distortion of figures, especially with regard to public debt. And have you adjusted your estimates with regard? Have you got an indication of how much was distorted or like that?
No, to be honest with you, the numbers that we put into the debt sustainability analysis, for example, we have a very clear definition of what that is. It's public and publicly guaranteed debt. And those numbers haven't changed. And frankly, those loans are all published in the Ministry of Finance annual report. And I think it was a repeat of that publication in the interim budget. So it's not that new loans were discovered. I think what they were referring to were loans beyond that spectrum, so loans that are not explicitly guaranteed by the government. But no, we haven't changed.
Do you feel that the taxings introduced in the interim budget is FDI friendly?
I think, I'm not sure what the impact would be on FDI, frankly. Again, I think what matters is that there's been a very clear commitment that these are one-off.
There was a proposal by the government that they wanted IMF technical support to find hidden money by in foreign countries, Sri Lanka non-treatment. Was there any discussion during your meetings?
Not during the meetings. We communicated about that before the meetings. Effectively, that's not what the IMF does. We do provide some capacity building and technical assistance with respect to legal frameworks on things like anti-money laundering. But I think those articles are referring to asset recovery, and that's not an area where we have any activity.
You said that there is a possibility that towards the year end, that there could be some sort of support from the IMF. If you could elaborate. By the year end, there could be a possibility of you all looking at a possible support to the government vis-a-vis BOP by the year end. If you could just elaborate on that.
Well, as I say, I don't think that we see right now BOP need, so we're not considering fund financing for a BOP need. In terms of closer engagement, to be frank with you, that's a process that will have to take shape over the year. And really, it depends critically on the government's reform strategy, because that's something that they need to clarify and enunciate, which I think they are moving toward. Because we're not a short-term institution. Usually, our engagement is looking over the medium term, several years. So it would be based on their policy priorities.
Doctor, of the $2.6 billion standby arrangement, which came to an end in 2012, what is the government's obligations to the fund?
Currently?
Currently, yes.
Let's see, I think the balance is still about 208% of quota, which would make it about $1.2 billion. Still outstanding. I think we project it to go to just above $700 million by the end of this year.
And by when have they finished their obligations as far as that facility is concerned?
Well, the bulk of, in terms of the obligations, the program is over, so it's really just repayment.
The repayment, yes.
Yeah, the repayment stretches, the bulk of it comes in 2017, and then there's a little bit left in 2018.
In terms of reserves, one of the issues has been actually the repayments of IMF funds have been eating into the reserves also. So, if you are looking at the overall reserve level, is that something that you might look at in the future?
I'm not sure what.
No, in terms of the repayments delaying it or something.
No, there's no. Sorry, that's not on the table. And as looking at the balance of payments and the flow of funds, there are sufficient funds to meet all obligations.
As sort of a lender of last resort to uplift the country's BOP, sort of, if one may use the term, on a ballpark figure, what would be the critical point to which the numbers would fall to where you would think of assisting to uplift the BOP of the country?
I think that's very case specific, and it would depend not only on what the level was, but what the projected level is going to be.
In your discussions with the government, did they say that they would take forward the Presidential Taxation Commission recommendations?
That's a good question. We certainly revisited the Tax Commission report because it's a good document. It has quite a lot in it. And I think there was an expectation of bringing that back into the discussion the mission coming in the next couple of months is going to look at, the tax regime, inclusive of all the changes that have happened since the Tax Commission report has been published. But the basic principles embodied in the Tax Commission report are quite sound. So I think using that as a basis is not an unreasonable assumption.
What's the reason, Doctor, that another mission should come just 2-3 months after you already come?
So I'm talking about technical assistance missions, which there's a very steady.
Come in another 2 to 3 months' time, is it?
Oh no, sorry. So I should distinguish. We're from the Asia Pacific Department. We oversee sort of the macroeconomic and relations with the country. We also send quite regularly because there's a very steady stream of technical assistance coming in. Missions from what we call our technical departments. So we have a fiscal affairs department which focuses on budget issues and fiscal management. We have monetary and capital markets department which looks at central bank, exchange markets, things like that. We have a statistics department that looks at issues related to national data. And it's a very steady stream of those missions have been coming into Sri Lanka for years now.
Was taxation of utilities discussed at any point in time as part of this medium-term fiscal consolidation program?
We did not get into the details on taxation. No, we didn't discuss taxation of utilities.
Revenues from utilities, was it discussed or broached at any point during the mission?
Any discussions?
Utilities, water, natural resources.
No, we didn't discuss that.
Just one point on the exchange rate, you say that the exchange the intervention should be limited to dealing with excessive short-term volatility and kind of cautioning them not to intervene in the foreign exchange market. But at the same time, you're saying the rates seem to be realistic, looking at the fundamentals. So, but why are you making that point?
Oh, I mean, there's always sort of a dividing line. I mean, looking at it this way, there's been substantial intervention really over the past 6 months. And what we wanted to caution against was, don't get too much in the habit of doing that, especially since looking at the fundamentals, the flow of funds is in reasonable shape. And actually, I think we in the central bank agree on that, and they are committed to a flexible exchange rate.
Doctor, in the past 6 to 7 months, as you rightly pointed out, I think on a net basis, there has been a drawdown of about $700 million US to the market from central bank reserves. So how do you see that from the point of view of the BOP position and whatnot?
Yeah, I mean, it's important, I think, not to get too wrapped up in short-term developments, although we all watch them very carefully. The interesting thing that we saw in the first half versus the second half of 2014 is you had very unusually low import growth in the first half of the year, while exports were resuming and growing quite well. So you actually had substantial accumulation of foreign exchange reserves up through, I think, July. Then, perhaps representing pent-up demand, imports finally started to come back up again. So you saw a rebalancing of the balance of payments really over the course of 2014 and some drawdown in reserves after a substantial accumulation. And what we've seen most recently is, that the market seems to be coming towards a more basic fundamental equilibrium. So actually reserves have firmed up in recent weeks.
Doctor, is there a possibility of foreign investors exiting from the government securities market due to the fact that the US economy is on the mend, and of a possibility of the Fed raising rates, they say by summer or some say by autumn in September? How would you see the picture in its totality as far as Sri Lanka's BOP position is concerned?
Well, I think the unwinding of unconventional monetary policies in the U.S. is certainly something that affects everyone, the flow of capital. For Sri Lanka, I mean, two things. One, I think that the markets have effectively priced in what that was going to be. I think the concern is whether or not there would be some radical departure from unconventional monetary policy that people are not expecting. And in terms of the impact on Sri Lanka, I mean, the price differential matters. And certainly, if rates rise in the U.S., there might be tighter liquidity conditions globally. But the net impact on Sri Lanka, I can't say for sure. That would really depend both on the rate differential and the pricing, but also I think on investor sentiment, and perhaps the medium-term view for the growth picture as well.
We had a problem in 2013 when the previous Fed chairman said that QE is coming to an end, and there was a massive
tapering tantrum. Yeah.
Precisely.
And Sri Lanka did relatively well actually during that. The volatility that Sri Lanka encountered during that period, there were really two periods of tapering tantrum, was comparatively less than a lot of countries in the region, partially because Sri Lanka is much less exposed.
But how could you say that Sri Lanka, when on August 28th, the rupee fell to 135.20 due to this volatility caused by this.
That's why I was saying relatively well. The degree of volatility that you saw on the exchange rate and reserves was substantially less than you saw in other markets. Thank you very much. Appreciate you coming.